What's up, crypto legends? In this episode, we're taking a look at the higher time frames for Bitcoin, the most important level of resistance and support that needs to hold. We zoom in on the lower time frames to analyze the situation here on what the price needs to do at these levels that I'm going to explain to get into a possible trading setup. We're taking a look at the DXY, very important that if it does break this lower high resistance trend line, this is going to be bad news for Bitcoin looking for a deep pullback. We're taking a look at some incredible news that is going on worldwide. So make sure to stay tuned till the very end. Now, before we go through the higher time frames, remember, if you are interested in trading, you want to do it on the best platforms. We've got Bybit and 𝗖𝗺 with the best bonuses down below in the link. Okay, make sure to click the links in the description to sign up to Bybit or 𝗖𝗺 to get exclusive deals only with my link. Now let's go right away here and go with the higher time frame scenarios. All right, so it's just keeping it extremely simple. Looking at the higher time frame, putting volume profile, no doubt that point of control from 21-22 was major resistance, got the pullback. Now we're above that level. There's a big volume gap. However, we are starting to get to a high volume node. That is basically from these consolidations happening in 2021. Now, the strongest level of resistance that was mentioned on a video a couple of days ago is that 7/8 Fibonacci from the pivot high to the pivot low. It's in confluence with the second highest volume spike here from the last 3 years of price action. Definitely a level that we want to take into consideration. That is the $57,300 range, okay? Just in case the price of Bitcoin starts shooting up, we know a level that could get rejected on the higher time frame. Now, the most important one of support is that point of control. That is in confluence with the highs here from the ETF volatility when we got the approval. If we were to start losing that low very aggressively, then we can consider that the price could be pulling back a little bit more. However, there is the scenario here, a bullish case scenario that I'm going to talk about right away. Of course, when we do take a look at the lower time frames and we do check here the impulsive moves that have happened during the last few weeks, this one being a one wave, this being a two wave, and we are in the third wave, meaning that a corrective structure that could happen here in the next coming days could definitely be a fourth wave, and we might find some support exactly from the point of control of 21-22, which is sitting here at the $48,000 range. When we do take a look at Fibonacci from the pivot low here of the third wave, if this were to be a third wave, talking about the bullish case scenario, we need to maintain here in between the 618 and the 382. That is the zone that needs to be importantly supported for the price of Bitcoin. That is sitting in between 46,200 and 48,700. That is where we do also have that point of control from 21-22 where we hardly got rejected. This is a massive level of resistance that should be flipping very nicely as support. And 50% Fibonacci is a common target here for a fourth wave when we do take a look at Elliott wave theory. However, this zone needs to get a reaction. We need to start dancing around here at the $48,000 range, holding here for at least 1 or 2 days, in my opinion, to say this is likely bullish. This is finding here some exhaustion for the bears and will likely recover. Now, if we do pierce through the 618 Fibonacci from this last wave created from the 5th of February, then of course that is not going to be looking good. This will no longer be impulsive. We'll be breaking. This will no longer be corrective. It will start to look very aggressive, and we could be looking for these lows to be claimed if we lose that 618 Fibonacci. No in impulsive waves if we do lose that $46,000 level, okay? We'll be paying attention to that in the next coming days. Of course, that is if we do correct all the way down there. We might just get a smaller corrective move and then continue to the upside. So what if we do get a smaller pullback? Well, let's zoom in on lower time frames, of course, and talk about the scalping day trading opportunities that could happen in between today and tomorrow. So zooming in here right away, analyzing this price action, of course, what we did see a few days ago is a massive impulsive move, a consolidation, and a major pullback, but we continued to create higher lows. So you might think to yourself, hey, what if we do get an aggressive drop here? Well, I'm going to tell you that the most important level is that resistance support flip, just like what happened a few days ago, where this resistance zone here from this uptrend managed to hold nicely as support. So if we do get that box right over here to these highs, this is the zone that needs to hold very nicely. We want to see that reaction, that small little consolidation, double bottom scenario. If we were to get that leg down and we start to react like this, obviously we're looking for that small little double bottom, just like what happened here on the 13th of February. Now that corrective move from this pivot low will be correcting all the way down here to round about the 618 Fibonacci. As you can see here, the low $50,000 range is extremely important. 618 from this pivot low. Now, if we do take a look at this pivot low to the pivot high, we can see here the 618 is slightly above from the highs. Now, if we were to see this as a one wave, two wave, this is the third wave, we are in the fourth wave, we should be maintaining here this low $50,000 range. And what you want to see on the price action here, zoom in on the lower time frames, is this kind of reaction where the price stops, it starts going sideways and you wick the low and you recover. So if that were to happen here in a basic resistance support flip right there, you got a resistance and easy support flip right over here. However, you need to get that reaction, okay? You need to see the bottom formed, a little bit of a reaction right there, and form that double bottom. Double bottoms are extremely easy and they have really great risk management. As soon as you form that second bottom and you recover, your stop loss is beneath that low, you're entering the trigger, and it could get you into a massive recovery. Now, of course, the trend is your friend and the range here hasn't been broken. So as long as we're ranging, there's been some beautiful trading opportunities inside of this range. When we do take a look at the fixed volume profile, we can see how we've been bouncing from value area high to value area low, value area high with a fake out here. As you can see, it formed a bit of a triple top, okay? Definitely some good shorting attempts right over here. Also right over here, if you were to get stopped out, to get that move down back to the value area low or the point of control of range, as you can see where we were getting a reaction. So you can trade the range. You value area high, value area low, value area high. Until you break it, you can short the highs and long the lows. Of course, if you do create that swing failure pattern, even better. If you come down to these lows and you manage to recover, that is definitely a good long opportunity with tight stop loss. Manage your risk very, very well, because as long as you're ranging, of course, you can just trade the range until it breaks, of course. This is why we need to manage our risk when we are in a range, okay? When we're shorting the highs and longing the lows. Great opportunity. We actually formed a really nice Gartley pattern here with this local triple top, where we can see here from this pivot high to the pivot low, we're coming all the way up here to the 618 Fibonacci range, then this pullback, and then coming here to the 7-8, as you can see on the chart, getting that reaction. Really nice pullback all the way here to the second target, which is that C point, as you can see on the chart. So they are really good opportunities inside of the range. And what I can explain right over here, like I said, you claim these lows here and you manage to recover above, you can easily get that bounce to the highs again till we actually break to the upside or we break to the downside. Now, to the upside is going to be a little bit more complex because the highs, you have it pretty far away from the value area high. So if you were to push up here all the way to these highs, they're very close to the highs created here on the 15th of February. So you're very, very close to hit that high. It would be a little bit of a risky one because you could just get that wick to the upside. I would rather prefer to see how these highs are going to be claimed, because we love swing failure patterns. We love testing lows and highs because you can actually wick above the level and get a major pullback. We've seen this many, many times. This was one that happened last week. As you can see right there, you got a clear high, consolidation, claim the high and get a major pullback. So considering that high here for a potential short right there at $52,850, just in case it creates that swing failure pattern. So we're trading the range until we see a clear breakout to the upside or to the downside, and then we're analyzing the next levels like I just mentioned. Now let's go right away here with the DXY, because DXY is looking very interesting. I am actually quite bullish for the DXY in the next coming weeks, even months, especially if we do break above this lower high resistance trend line. Now, we are currently above the point of control that has been proven to be strong resistance, as you can see here on the chart. So we managed to get above it on lower time frames, maintaining as support, and in the next couple of days, all right, by Monday, Tuesday, we should be breaking out either to the upside or breaking down the point of control. If we break below the point of control here on the DXY sitting at 103.6, we are very likely to come down to test these lows possibly, right? The value area low of this entire range over the last 2 years. This is looking at the daily chart. This, of course, will be bullish for Bitcoin, but Bitcoin will manage possibly to go all the way up to $57,000, where we have that clear resistance zone on the higher time frames. That is the 7/8 Fibonacci, and it is also that spike here on the volume profile. These spikes, guys, are massive resistance or support levels, as you can see here from this one just created on the ETF news. So we need to consider that $57,300. It could very likely get a decent pullback, and if the DXY does break down here, then obviously we can see Bitcoin possibly getting that rally in the next 1 to 2 weeks. On the other side, bearish case scenario, of course, for Bitcoin and stocks, we get that breakout on the DXY from major lower high resistance. This is from the last 2 years. If we break above this lower high resistance, then no doubt in my mind, we'll be coming all the way up in the coming weeks to test the highs here from October of 2023. Now, could it double top or could it break through? If it breaks through, then obviously this is really bad news for stocks and Bitcoin, likely to get a very deep pullback. Now, for the moment, that lower high resistance is what we're going to be eyeing here for Monday. So we're going to be paying attention here to the DXY, because if we get that solid breakout, guys, the Bitcoin correction is imminent, okay? And it could be a very deep correction, as we do see the DXY still recovering here, possibly for a few weeks. Now let's go right away here with some news that is going on. Just in, the 9 new Bitcoin ETFs now hold 258,000 Bitcoin in total. That is more than 1% right now. This is growing every single day. Now, of course, the inflows have gone down slightly. So are they going to start accumulating a little bit less, or are they going to still continue rocketing in the next 1 to 2 weeks? And we're going to see the price of Bitcoin still going up, something that we're going to see in the next coming days. If the inflows start going down, of course, then the hype is going to cool off a little bit. We could be seeing a pretty deep correction if we see that DXY breaking that lower high resistance. Now, Hong Kong Bitcoin Futures ETF hit record highs as trading resumes after Lunar New Year. Spot ETF is coming very soon. Also very bullish for mass adoption and for long-term price action to the upside. Banks are pushing the SEC to change accounting rules to make it easier and cheaper for banks to hold digital assets like Bitcoin for their customers. Now, current economies in recession, and this is confirmed. Peru, Japan, Ireland, Estonia, Finland, Moldova, Denmark, Luxembourg, United Kingdom, kind of all breaking down here. Now, the question is this good for Bitcoin, or is this going to be bad for Bitcoin? Now, of course, most of Bitcoiners out there would think, yeah, absolutely, I'm not holding the currencies. This means that the more printing is going to come, devaluation of their local currencies, and Bitcoin is definitely a solution. I would say for the long term, because short term, in a recession, everything usually falls, including Bitcoin and crypto. So this is something to be a little bit cautious. Taking a look at the next thing here, we have the Federal Reserve governor says, I don't want banks holding large amounts of crypto ETFs. I think he says this because he does see it as a threat. Thank you very much, everyone, for joining. Make sure to check out Bybit tutorial here to learn how to trade on that exchange, and I'll see you in the next one.